Welcome to my channel. I'm Dr. Romano. There are a number of indicators that I use to predict a stock market collapse. And part of those indicators, I feel the most important thing is the commodities market. Because if you look back in time, the history repeats itself over and over and over. If you understand why commodity prices go up and down, you'll understand there's a relationship between the stock market and the real estate market. If you look back in time, you'll notice that every time that there's a stock market collapse, our commodity prices kind of skyrocket. The last one that we had was in 2020. And so we had a little stock market collapse. It wasn't because of the economy, it was because of the COVID and the pandemic that happened. Somebody asked me a question through the live chat, and that person wanted to know, but if there's so many permits to build new homes and new properties, and there's a bidding war between each house being sold, and there's 5 people bidding on the same house, then how could we have a stock market collapse? Well, the fact is that those permits can be dried up overnight, and all those buyers that are looking to buy can actually hold back immediately. And what would change that is the possibility of a stock market collapse or an actual stock market collapse. Because investors aren't going to buy real estate at the top of the market. And once they realize what that top of the market is, they pull back. Right now, everyone thinks, oh, I have to get on the bandwagon to buy a property before interest rates keep going up. But that's a typical person. That's not a savvy investor, because a savvy investor wouldn't think like that. A savvy investor says, okay, so it's skyrocketing and it's been skyrocketing. How much longer? That's the question. Now, someone who's a doctor of finance, we look at correlations. I look at correlations for my PhD research. That would be the commodity prices. So you look at commodities prices. I always use gold because the gold is a great indicator. When you look at gold, you notice that, okay, so the last gold spike in 2019, the end of 2019, they realized that there was going to be a stock market collapse in what was it, the third month of 2020. That was an indicator that there was going to be a stock market collapse. And so all you have to do is go through back in time, and you'll notice that there is a spike in the gold prices. When you discuss today, 2022 of June, the first week, and when you look at gold prices spiking again, well, how long is it going to take before the stock market actually does its collapse? Well, the first quarter of 2022 was very bad. It was a very choppy market, and that happens when traders are pulling out, investors are pulling out of the markets, long-term investors, etc., because they don't know where the market's going to go, or they have to reposition their portfolios for a new direction. And the worry was that interest rates were going to go up, but they didn't believe the government was actually going to do that. The government has to do that because of inflation today. When you look at the past history of inflation, how did the government deal with it? There's many countries around the world and throughout time that they didn't deal with it like the American government did, and it was very bad for the entire country. Better to have a little recession than to have a real collapse when there was inflation. But our country is so equipped and so resilient to handle different type of fluctuations. They act immediately. They should have acted last year, and they didn't, but now they did. It should have been a gradual steep with interest rates, because when traders are trading and interest rates go up or down, their portfolios turn red. My first real job was at an investment bank on the trading floor, and my job was to review the trading books, that's the profit and losses, before the chief financial officer would review them that day. Now, of course, you would think that, oh, they're so sophisticated that they would hedge their positions because they're assuming it. Well, I don't think that the traders at investment banks are the best. The best traders are at hedge funds because they own their own company. so they have to be the best. Before we continue the video, please remember to do thumbs up if you want to say thank you. Thank you so much. To answer your question about whether or not the real estate market's good or not, or it's stable or not, and you're questioning whether, oh, we have so many permits and we have so many buyers per house, there's not enough inventory. That all dries up when there's a stock market collapse. Because if you notice throughout time, only the very savvy people buy real estate at the right time. Right now is not the right time. Not even last year was the right time. You should have bought real estate 5-6 years ago. That was the time to buy real estate, not today. For example, in the mid-1990s is when you should have also bought real estate. Of course, again in 2010, 2011 time period. My previous video on how to time the real estate market was very important that I made that video, because that goes over a lot about our market cycle. For those of you who are buying real estate, who are selling, don't look at how busy you are or how easy it is to sell a house. That changes overnight. That's why if you do own real estate and you have bought your real estate at a cheap time, like 5 years ago, I would say it's a good time to sell it now. If it's a second property, it's an investment property, etc. Because a substantial amount of income and equity, and it's time to sell it. Now is the time to get into the next cycle. And if you watch my previous 4 videos, you will understand how to time the market. You don't have to be a guru or an Albert Einstein to understand this. Certain people understand history and certain people take advantage of history and apply it to the future. A professional will tell you previous returns don't guarantee future returns. They're just covering their you know what. The fact is that the past history predicts the future. So if you know that we're having a commodities spike, you make sure you get out of the stock market if you're not capable of shorting your positions, or get out of the real estate market if you're not capable of paying your mortgage for a year with savings. Because if you are surviving on even 2 incomes and you don't have savings because you bought the house, then how are you supposed to protect yourself with risk management? You're supposed to have at least 6 months to a year's savings just for your mortgage payments, not for your car payments or everything else, saved away in a separate account for your mortgage payments. You never ever get behind in your mortgage because it will affect your credit. You know, some people say, oh, if I lose my job, I'll sell my house. Well, how are you going to get a job in a stock market collapse? It's going to be very difficult, and it probably won't be the same job for the same income. You overextended yourself when you shouldn't have, and you should have actually sold it. If you use my market analysis that I talked about, timing the markets, then you could take advantage of this. You bought, let's say 2-3 years ago, I'm sure you made a little income if you sell it now. That's pretty good. It's better than taking something than nothing. You could probably say, well, I'll just keep it until the market goes up. The problem is that this next 8-year time period when the stock market collapses, sometimes it recovers sooner, but interest rates are not going to be cheap like it was. This next decade, you're going to have high interest rates, and it has to be like that. It's not this cheap interest rates, because cheap interest rates were only to create a real estate bubble. That was all planned since the mid-1990s. The mid-1990s was a change in our market. It was to create a real estate bubble, and they rode the real estate bubble until they couldn't do it anymore, and now we're here. Manufacturing will come back to the U.S. now, because you can't stimulate an economy with another real estate bubble. It's not going to happen. People who were in the market for $350,000 for a house, they're now in the market for a $500,000-$600,000 house. They got to be nuts. That's totally nuts. They're putting themselves in debt for 25-35 years. Back when my grandfather bought houses and my father, you saved your money for 4 years and you bought the house cash. That was creating wealth. But that's because interest rates were high back then. The typical way to make money was to own your own business, making some sort of product or service. There's always a market cycle, and that market cycle is coming back again. I want to thank you so much, and please remember, if you like my videos, please subscribe to my channel so you get my future videos, and also please remember to do thumbs up to say thank you. Please remember to send those messages to the live chat so I can make future videos just for you or answer your questions. And then finally, please share this video with at least 5 people. I want to thank you so much.